A lot of people are talking about the 2-1 Buydown program or other temporary buydowns. So in this video, we're going to be covering temporary buydowns, the different types, how they work, and whether they're a good strategy for you to use to lower your interest rate when buying your home. First, as the name suggests, this is a temporary reduction in your interest rate for a specific duration of time. Now, there are several types of buydowns, the most popular being the 2-1 buydown, and then there's also the 3-2-1 buydown and the 1-0 buydown programs. So let's say you qualify for an interest rate of 7%, which is your note rate. For a 2-1 buydown program, for the first year, your interest rate would be 2% lower than your note rate, which would make it 5%. In the second year, it would be 1% lower, which is 6%. And then from years 3 to 30, the end of your note, it would actually be the full note rate at 7%. Now, with a 3-2-1 buydown, your first year would be 3% lower than your note rate. Your second year would be 2% lower, your third year 1% lower, and then from year 4 onwards, it would be the full note rate. And similarly for the 1-0 buydown, it would be 1% lower in that first year, and then the rest of the term would be your full note rate. So obviously the costs for each one of these programs differ, and the most popular one tends to be the 2-1 buydown program. So how does this work? The first thing to note is that you as the buyer cannot pay for this temporary buydown. It has to be funded by the seller or the builder. So basically you're using seller's concessions, also known as a seller credit, to subsidize your monthly payment for the duration of that temporary buydown. Now this would have to be negotiated in your purchase contract when you write the offer to buy that home. Technically, what's happening here is that the note rate still applies to the entire duration of the loan. In the example that we looked at, it would still be a 7% note rate for the entire loan. However, the seller credit becomes an upfront payment for the difference between what the loan would cost at the note rate versus what it costs at the reduced rates for those years. And this difference is then placed into a holding account, also known as an escrow account, which allows you as the buyer to make lower monthly payments, and the difference is paid out of the escrow account to bring it up to the full monthly payment at the note rate. So why would someone want to do a temporary buydown? Usually buyers that choose this option are hoping that the interest rates will drop significantly in the near future, which will allow them to refinance before they get to the higher payment at the full note rate. So something to keep in mind is that there are many variables that would affect your ability to refinance. Also, the interest rates may not have dropped as much as you had hoped for, in which case the numbers may not make sense for you to refinance at that point. Another reason to choose a temporary buydown is if you're only planning on staying in the home for a couple of years. So finally, let's look at the basic requirements. First, this is available for conventional FHA and VA loans. So it's only for 30-year fixed rate mortgages. So it's not applicable for an adjustable rate mortgage. It has to be for a 1-unit single family residence. So you cannot do this for an investment property. Also, this only applies to purchase transactions, and you cannot use this for a refinance. Now, the minimum credit score required is usually 680. The borrower has to qualify for the full monthly payment at the note rate. And finally, as we mentioned before, this has to be funded by contributions by the seller or the builder. Obviously, each situation is different. There's not a one-size-fits-all. This is a great strategy for a lot of buyers, but for some people, it may make more sense to go with a permanent buydown using discount points rather than going with the temporary option. If you have a scenario you want to talk about, reach out to me and we'll go over the numbers. We'll look at what that break-even point is, and we can come up with a custom roadmap for your situation. So like and share this video, subscribe to this channel if you haven't already, and hit that bell to be notified of any new inspirational and educational videos like this one. Thanks for watching. Have a great day.